Hello, everybody. Maybe unfortunately or fortunately, this session is going to be in English, so please prepare for translation. I think everybody can get a gadget like this. Before I will ask questions to my guests, I have to explain you the challenge here because our guests are from 3 different countries with very different situations. So the US produces the global tech leaders. It's market-driven, and they have multi-billion rounds. It's the biggest venture capital market in the world. Russia is expanding regionally, strong state involvement, and is more, after 22nd year, it's more locally focused. And if we go to look to Vietnam, we know it's the 2nd market in Southeast Asia. It's policy-driven, very incentivized, but it's strongly growing, has a very strong early stage. So we are looking today at very different markets. And my first question would be, as we're here for understanding in how far AI is changing the game, AI has made software quite cheap. Is it killing the classical venture capital model? Can you elaborate on that?
Yeah, I think, if you're looking at the traditional capital model, right, like AI does have made software production a lot easier. People can deploy a lot quicker, but we need to think a little bit deeper, right? So think about atoms, where AI meets atom, right? So you have biotech, AI in smart factories, fintech, where you have a lot of regulations, you have things that are much harder to do in terms of relationships, B2B sales. So this becomes a moat when it comes to venture capital. And so this is what we try to look for. Even AI in defense, right? These things take hard amount of penetration just to get in the government and deploy a product. So this is where we see landscape is heading.
Thank you, Timur. Kimmy, what would you say the next unicorns? Where can we expect them? Where will we find them? Where are the next Googles and Amazons?
So I would say that in the landscape of the Vietnam, that we are narrowly that we looking for the business, the startup, that is have the good combination between that the AI as well as that leverage or get the marriage with the physical world, such as that advanced manufacturing, as well as the robotics. A lot of the corporate, I used to work for the corporate venture capital that backed by the manufacturing, so that they have the very strategic plan that they wanted to do. That's a digitalization of the sector, which seem quite slow in terms of you leverage the technology, for example, like garment and textile, which is quite slow compared to the fintech or for the agtech, for example. So we kind of looking for the one that the startup or the business can solve the problem of the underserved sector.
Thank you. Zhenya, wherever you appear, it's about discussing the future. What's your point of view regarding the origin of next unicorns and maybe the end of the venture capital model, because producing software became quite easy? Low code, no code, wipe coding. Where are we going to head?
Thanks for questions. Let me speak in Russian, please.
I think now artificial intelligence is changing the framework of operations of many companies, because mega platforms are emerging, basing on which there are opportunities to build complicated architecture in artificial intelligence. At the same time, specific solutions are emerging based on AI that can articulate the power of AI down to individuals, giving them practical application in business and real life and personal life. And those who are successful in building business models, successful business models, solutions or platforms, now it's unclear. Large streams go to large platforms, but we see that these are infrastructure investments, large investments, and we do not know when it pays back. But smaller companies quite quickly find clients, but cannot stay long in the market because development of large platforms create models that are more effective than smaller solutions. This is a dramatic point for ventures. And I think that in the coming year or two, this trend will be balanced, and the speed of launching solutions by platforms and companies will be also balanced, and we will see the slowing down of the market as we witnessed it 20 years ago with bubbles, and the business models will be clearer. Who is going to be the first? Hard to say, but I think AI in medicine or in power sector or in industry, because the key problem there is to adapt AI into the environment. The curbing factor is not the power of AI, but the complexity of adaptation, and this curbing factor is helping companies to gradually articulate complicated structures, and it mitigates the risk of super fast competition and leaving the market because of large models.
I have a question here for you. It became easier to copy, the whole thing is speeding up. I give you an example. I invested in a company 2 years ago. They're doing presentations automated on AI. And at that time, there were 2 players in Russia. Now it's 15, because there are a lot of copycats out there. So startups have not that head start of 1 year, for example, they had in earlier times. It's going to be faster. So what is essential? If it's not the code, because you can easily copy, what is essential, Zhenya, for you? What does a startup have to have so that you're ready to invest?
Well, as it is the case in many areas, as before, copying is not the key problem. Problem is when a lot of companies simultaneously do something similar, and the company you're investing in might not be the leader in this race. So as it is the case with other stories, we not only look at technologies, but the team and their ability to tackle questions of scaling and growing. How competent the company is in business area, because technologies is something that can be easily copied or created, but to build an effective business model is a challenge indeed.
About distribution, building brand, building trust. Sometimes they say the second mouse gets the cheese, if you know this saying. What would you say? Which mouse gets the cheese?
I think that the era of the single and static technologies is over. This is the time that for the dynamic and the composite factor of the startup, that not only technology, but also have many interconnection factors. So I will list down in order of the importance. So first of all, that is about the data and the user effective network. Secondly, that is about the authentic of the business. And the third one is about the business model. This is how that the startup, they deliver the product or the service, how that they can acquire the user. And the third and the final, this is about the excellent operations. So that could be the mouse got the cheese.
Okay. Thank you so much, Kimmy. Timur, what would you add? Is it all about execution speed and data?
Yeah, execution speed, data, regulations. I think I'm now a big fan of regulations. They're a lot tougher to do, and people who know how to maneuver these are definitely going to win. And I agree with you. It is the second mouse that's going to get the cheese, right? Like, look at Apple. How many businesses Apple has destroyed? Like, Pebble was there before the smartwatch. They came in because they had the distribution. They know how to build the brand, right? They came in, dominated. Same thing for Samsung, right? Like, literally, Samsung's like, strategy is let's wait until we see what the other guy's doing, because we can copy it and then kill it with our distribution, right? So it is true, right? The people who know how to make distribution let other people innovate. You just copy with your scale and you dominate.
Timur, I have a special question for you, because I know you're investing in early stage in the States. For me, as an investor, it became somehow more difficult to identify whether a startup is cool or not, because they have all the tools, they make the perfect presentations, and it's became harder to understand, Is it a fake? Is it a scam? Or is it a really nice startup? What do you think about that?
I think you really, as an investor, when you're at early stage, you barely have amount of data to go by, right? What you're looking at is a founder, and you need to see in their eyes, and you're gonna say, "This motherfucker's gonna make it rain." I could see it, right? And the same question is, does this guy have fire in his eyes to make it happen? And then so in that stage, you need to look at some early signs of traction, right? How are they getting customers? How are they getting distribution, right? Are they coming up and following up and saying, Timur, like last week I had 2 customers. Like this month, by the way, I just like got 6 more, right? I signed up McDonald's, I signed up Coca-Cola, and we raised our traction, and then we're doing a lot much better. And I've seen this across all founders. The really great founders are very data-driven. So when I'm asking them numbers, or when I'm asking them, what is your CAC, what is your weekly growth rate, they're answering that perfectly.
So they're in their topic and they're growing and communicating, right? Kimmy, you wanted to add something on that?
Yes, I agree with Timur.
Okay.
And I would like to add some of my opinion is about, so we go through quite a lot of the pitch deck every day. And I usually, then not only the founders, I would love to talk and discuss with like the core teams, so like how they are kind of on the same page and push the product into really commercialization. And secondly, that is about how they mitigate the risk of the early stage. Is this about the market risk, about the risk relating to the entrepreneur, the team, the founders, about into that finance, for example, how that they leverage the funding or allocate in essential action plans. Yep.
Okay. Zhenya, what would you say? Does all this change the target return model of funds? Do they have to have a different model? Maybe not focusing too much on big exits, but maybe smaller exits bringing 3-5x?
Ну, это зависит от рынка.
Well, it depends on the market, on the model. It all depends on many
Если брать
things. If we take the market of AI, then indeed
как и на других рынках,
there will be fewer large exits. Well, first, the attention will be drawn to them, yes, but the most frequent case will be, of course, mergers of companies because of competences and qualification of the team in narrow segments of the market. Sometimes this or next year, I think we will witness a process of large integration of large companies in AI that will start buying companies from the market to become large players in various sectors. Because now companies are quite focused on their market or their client. And this is a very dangerous strategy. But the winners will be those who create comprehensive solutions for complicated industries.
для многих небольших стартапов
And for many small startups, this will be a more offer case of exits than achieving M&As or IPOs on their own.
That for some startups it became easier to come up with an MVP, to get the first traction, first clients. So this also changes their request for capital in a pre-seed seed stage. They need less capital because they don't have to code like 2 years to come up with a product. What do you think on that? Does this change the behavior of funds, the products a fund has to offer to startups?
Ну, конечно,
Well, of course, this creates risks for startups because large companies, for them it is easier to start testing a lot of hypotheses and then make their products. So in this sense, now the early stage is becoming even more risky, and we see more companies dying at this stage. And at later stages, you will get into companies not where there are just ideas or they just started, but a product is in place and understanding that the users need the product. And that's why what Kim mentioned, this attitude, this attitude of the team towards users, how they respond to users, it's more important than just create an idea.
Trending towards technology licensing, hiring a team, instead of waiting for the big exit of a big startup. How does this change the deal structure and the exit strategy of a fund?
In fact, that this, I may say this is not really a problem, but it actually that is appear in among a lot of industry and a sector. However, that recently that we know that there is a lot of the investment with behind that has a certain strategic, like they acquire the talent or acquire the patent rather than integrate the whole company. So this is put the current investor in quite of a lottery or paid more attention on. This is the early preparation for the deal structure. Like they should pay more attention on, the planning for the acquired high strategy. So now that this is not really much popular here in Vietnam or Southeast Asia, I guess that Timur based in the US, there will be more and more. I would love to hear more about the case study from the market. But I say that this is the time that for the VC to prepare for a certain cases. If there is the follow and investor in the follow rounds that they have certain that. And one more that I would like to add in that is, beside the VC, there's a lot of corporate venture capital and a lot of VC or fund backed by big corporate. And they have a certain intent for the acquired and high investment strategy. So be cautious and be prepared for those situations.
Okay.
Yeah.
Let's give this question to Timur. Do you see that exits become more fragmented? That companies are hiring teams instead of startups?
I mean, when you're looking about exits, right, there are three ways exits happen. Like the easiest one is acqui-hire, right? So like you're acquiring a team because the talent is good, that's the cheapest, and then that's what most of the times when a founder comes to you, oh, I exited, you need to ask them how much did they exit for, right? Then it's the technology, right? So if somebody has technology, they pay you a little bit more because internally what they're doing is cost analysis, right? How much does it cost me to build this versus buy it, right? And if the team decides, for example, in Amazon, it's like anything like below $50 million, we have the permission as a department to buy a company. And we can just make that choice without going to the board. And then Amazon does that very well, and they can buy a company. And the last one is distribution, right? So like if you have all three, if you have distribution, which is the hardest to get, right? Imagine entering a market in Russia or Middle East where somebody is dominating all the Rolodex, as in they have all the contacts. As a competitor, it's going to take them a long time to enter, right? And then so it's really important to like think about distribution as the last part, that I have the whole market. And I think startups now have a really good chance to like dominate everything and to wait for these big exits to happen.
In the States, we know you have this phenomenon of one-man shows, one founder, solo founder, using, instead of a team, artificial intelligence. Can you tell about this trend? Is it developing? Is it speeding up? You have the first unicorns in this structured like this, one founder, solo founder using AI. What would you say about this?
I think teams are definitely getting smaller. If you even look at Telegram, I think it's a very small team, right? It's like a team of 10 to 20 people, a unicorn company. And in the States, I think Sam Altman has a very famous bet, right? He's going to bet on like who's going to be the next solo founder that's going to create a unicorn, right? And then so they have an internal bet. And we're definitely seeing that a lot, right? So like within even my firm, like, teams are definitely getting a lot smaller. They're utilizing AI and AI agents to outsource most of the work. So I think that's going to happen.
Okay. Before I'm going to ask Xenia about Russia, Kimmy, do you have this trend in Vietnam? Have you seen solo founders using AI instead of a team?
That is not really popular. Or maybe that I'm not observed enough. But as far as I know, that they're at very like preceding stage. They're solo founder. They're also trying to leverage the power of the AI to set up the business at very early stage before launching it. So I may say that this is also the idea of Elon Musk. He wanted to have the company that wholly run by AI. But so far I can say like, in Vietnam and Southeast Asia is quite a little bit behind.
You like teams more than AI, right?
Maybe, probably.
Style. Xenia, what do you think? Because I'm asking this because I don't meet them. I know one founder in Russia. He chose me as a mentor. And actually, we're doing a nice thing right now. he has 2 startups. He says he needs a solo startup, and I'm his mentor. And so we're now meeting once a week. I'm helping him. He's just one solo founder using AI, and we're recording these sessions. And if it's going to be a very, very nice startup, then we're going to make a podcast show out of it. But I've just one founder met within this year who is running this business model. Zhenya, how many do you know?
Да, я соглашусь, что
Yes, I would agree that in Russia there are few startups like that. I thought over your question and I have a hypothesis for it. There is a very popular model when selecting startups, X-shaped profiles. When it is important, when in the team you have business competences and professional competences, and it's hard to combine the two in one person. You should be a very experienced, cool businessman as Elon Musk to be a super entrepreneur and a good engineer at the same time. Usually you need several people so that they complement each other. Artificial intelligence can take a lot of technical tasks, but the task to create the value is not for AI. That's why people are important. And moreover, especially in Russia, it is important that you think about things using someone. I mean, you create ideas in a dialogue. So your founder you're working with, he uses you as a co-founder. Probably he saves money on a colleague.
On this topic from a different perspective, AI makes decision-making faster. It helps maybe when you run a fund, it helps scouting, scoring, decision-making, portfolio management, whatever. Timur, what do you think? Is AI abolishing the venture investor? At the end of the day, they will AI investors, not us.
I don't think so, right? So you're definitely seeing like deal sourcing, right? Looking at the data, but you still need to build trust with founders. Right, you still need to like see how the founder is in terms of like how they respond to you as an investor, how they're building relationships, right? So these things are not going to be replaced by AI, and definitely like if AI can predict everything, right? Like you need to spot things, and money is made on opportunities where other people fail to see. Right? If AI is seeing everything and everybody's predicting anything, then as humans, we need to spot the trends that AI misses, right? And that's the whole superpower of VC, right? Like I invested in a company, like for example, Airbnb. So many people rejected Airbnb, but the people who believed in the startup, they said, okay, let's put in the money.
But they didn't ask AI.
They did not ask AI, right? So I don't think these things are going to happen, especially at the early stage where I'm at, right? Where you don't have the data. We have just the founders with the story and a vision and a little bit of attraction, right? So I think this still requires human touch.
Kimmy, so investing is relationship management in the first place. Would you agree?
Totally agree. Since that AI cannot sit here and have the panel discussion,
Not yet.
So I usually say like venture investment is kind of the people business. From deal sourcing, doing analysis, when we have to, especially that when we do the term sheet with the founders, or we make, like we do the proposal to the investment committee, kind of, and after that post-investment process. So I think that AI nowadays, it changed a lot the way that what we doing. It's not only in venture capital or doing the investment only, but so many fields that have a certain impact by the AI. So I think that for as an investor, if we know how to leverage the AI as a tool or as a personal assistant, you can free up the time instead of like doing searching, thing that AI already have done beyond the human capacity, and use that for high judgment decision making. So probably that it will create a lot of value.
Okay, I agree here. So, Zhenya, is it investing is more about making judgments, building trust, and giving support beyond capital? Would you agree?
Ну, Мои коллеги сказали.
Well, my colleagues did say a lot. I would like to add that indeed in venture, in decision making, the main function is to take the responsibility upon yourself, to take this load, this weight of responsibility, which balances the intellectual and thinking process very well. When you just not only make the analytical decision, but weigh the risks and whether you're ready to take them. And the entrepreneur also takes the risks, and you take the risk, and you thus help each other to level off those risks. And that's the essence of the venture business. It's impossible to impose it on the AI because it just doesn't take the risks. It just can advise you. But yes, your arsenal of your knowledge about those questions expands, and you can make decisions on a more weighty, more responsibly. But it's you who makes the decision, and that's exactly sets up a trust when you know that your partner is responsible, you invest.
I love venture because if you're not optimistic, you're not starting a business. If you're not optimistic, you're not investing. So a lot of optimists in venture, actually. So let us start before we check whether we got some questions from the audience. One last round. If you would give an advice, Timur, to people who want to start a venture business, what would it be? The most valuable advice from your side?
Look, I'll give you the advice I gave myself, right? Like there is a book with Nassim Taleb, I think you mentioned Skin in the Game, right? So, and he talks about is like, you know, you got to prove to yourself that you're good enough for VC. And when I started putting in my own capital, whatever I had, like 10K, 20K, to see even if I qualify to get other people's money. And the startups I invested in started doing well, right? So between me and my partner, we invested in 2 unicorns early on. And then we started doing that as a syndicate. So that means you're collecting as a group of people with other angels. And then so our checks became bigger. And then so we started investing from that. And then that, you know, startups that we invested in started doing really well to the point other VCs want secondaries in like our startups. So that means other VCs want to buy out our rounds. And then now it's through the fund, right? So exactly what we're doing. So whenever you go to LPs, and they ask you, like, what proof do you have? You can say, like, well, I started as an LP. I started as an angel, then I started as a syndicate. Now I'm doing it as a fund.
So your advice is start small and let it grow.
Right, start small because you also need to learn, right? Like, you need to learn, like, start with lower bets that you think that you can make, right? And always invest money that you think you can afford to lose.
Great. Kimmy, what is your advice to new venture builders?
Optimize for the customer rather than the multiples. So venture capital that is hinders the outside values, and no matter that is for the founders that build a startup, build to sell or build to last. Those is strategy, or even that for the ventures investor, they have the very close collaborated with the customer, solve the problem of the customer. So this is my advice that both ventures investor or the founder should go back to the core of why we start, solve the problem of the customers.
Focus on the customer and
Yes.
bring value to them.
Yes.
I think that's always a
And
good
then,
bet.
and then that, you know, IPO, a massive IPO or a small M&A, it will follow if that has happened. Yeah.
Great. Zhenya, I would hand over the question to you.
Да,
Yes, I agree with Timur and Kim. Indeed, that's very valuable piece of advice. I would add the importance of your own industrial expertise for you to enter some other topic. Because when you rely on experts, on specialists who can explain to you some technical difficulties, that's of course valuable. But very important is for you to understand some underwater thanks. I had my personal experience, 15 years in medicine and pharma on the side of the company. And when I was told about the methods of treatment, I can also see not only what doctors say, but what they don't say, those farm company among themselves. I can see them from inside, and that helps me to make the decision. So you have to know the industry from the other side, and then you will be able to see not only the positive sides, but some concealed negative sides, and this can help you and save you very much. So
We have a network, right? Great. I'm not sure whether we have got some questions from the audience.
By the way, I want to make a point. You know, I did say start writing checks for like 10,000, 20,000. I realize that not a lot of people have that money. You can even do it for free. Just start helping founders, and then like have sweat equity, right? See how much value you're providing to companies that they want to give you equity into their startups, and then you could start that way as well. So like this is one of the ways that you could start testing out. Like, are you even providing value as an investor or as an angel?
And 10,000 rubles is also okay.
Yeah, anything is okay,
$100.
right? So if you're good enough, I think like a lot of founders come to me because like the value I'm providing.
Okay. We have one question here.
I have a question to Timur. As you work on US venture market, do you see the impact of deglobalization that is going on? So, like Russia closes as the market, right? China also probably is not so easy to access now from US as the market. Do you see the impact of this process of deglobalization on the US market?
I don't think so. There's a lot of companies that have a Delaware C Corp, right? As long as you can create a Delaware C Corp, it doesn't matter, right? And I see this a lot in especially with the Russian founders, right? Like it's like, oh, what do I do? Will people accept me? Blah, blah, blah. Market doesn't care, right? You're not gonna start using ChatGPT if it's made by a cockroach, or you're not gonna like, stop using iPhone product because it's made by a certain person. And then so it does have effect, like, but it also, there is an opportunity here, right? It's like in current environment, you could see a lot of companies that have pulled out. But that gives access for you to start taking over that market, right? So these things are in play, but it's just like how you maneuver and navigate the market.
Thank you so much for the answer. Guys, if you have any questions.
Someone
At the end of the room.
Благодарю.
thank you. Better English or Russian? Just any? Just imagine if there is a startup, 30 million rubles a year of sales. So what do you think? What is the more realistic chance for what will happen to it in the M&A framework? Whether it's going to be perceived by big tech as technology, and they would assess it as to how much time they would spend to develop, and that will be the price of the product? Or is it going to be a story similar to ready-made business they buy conditionally with Bizarre? And there will be a different model of calculation. How do you think they usually assess the development inside or as a ready-made business?
Maybe you want to answer. What is the
Может быть, вы хотите, Женя, ответить, какая база для оценки? Я все.
Я начну с того, что цифра в моменте не имеет вообще...
Well, the number doesn't mean anything. The growth, potential market, and the speed of growth in the potential market, that's what matters. If it is 30 million now, 100, 150 tomorrow, and 3 years, 300 million or 1 billion, that's one story. Then, of course, it's going to be interesting and can be sold as a potential market. But if it's just a stable number for several years running, this startup has maybe no value or very low value, or just the cost of employees.
Okay. Do we have any other questions? Yes. We need the microphone over here.
Don't worry. Okay, I really appreciate the session. So good work for all the panelists. I just miss one key word that I didn't hear here today, which is scalability or sustainability of the business, because we all know that 70, 80, 90% some fields of startups after 2-3 years, they don't exist anymore. And I know, because I work also as a venture partner, that maybe the venture capital strategy, the exit of you guys, it's especially in early stage, you just help them during the first years, and maybe you don't worry too much about the medium and long term. On the opposite, the corporate venture capital operates with another more strategic than financial strategy. So, I mean, I'm just curious about the different take on this.
So the question is scalability, sustainability in
yes,
terms
medium,
of AI-driven
long-term
startups.
exit versus
I will repeat.
more traditional.
So the question is sustainability and scalability of AI startups, right?
Yes.
Timur, what's your guess on that?
Kimmy, I don't know if you want to take this question. We can switch. Yeah. So I mean, scalability will always be number one, right? So whenever I'm looking at, whenever I'm investing in startups, right? Two things I'll look at, how are they pricing the product, right? And if the pricing matches the amount of customers that they're going after. There's a famous chart that shows you how many customers you need to get to $100 million in annual recurring revenue for you to become a unicorn, right? So that's number one. And it's true, when we go in certain markets, right? The market's only big enough. For example, Vietnam, right? The market can go only big enough. So what happens in Southeast Asia especially is that they will scale to a particular level, then they will do horizontal. So if you look at Samsung or if you look at LG or Grab, they have only scaled to one particular area, but they have multiple verticals in towards what they're doing. I'm not a big sustainability guy, so I don't know how to answer that. I just want to see which ones create a lot of multiples and has a big enough market.
Kimmy?
I think that the definition of the sustainability is also depend on the situation and the landscape by the time. So as from the standpoint of the corporate venture capital, sometimes that their strategy is to invest or acquire the business just to test their hypothesis about their long-term business strategy. This is for test. And another side that for me as a venture, doing the investment into PE, both PE and ventures like startup, I really do believe in invisible of the market hand. So the market says itself. No matter that if there is a competitive and they offer to the clients or to clients or the customer which a high performance with the similar price I can sell. So this is why that startups still stay there in the market. So I mean that the customer and the market can define the sustainability of one business.
Thank you. Zhenya, do you want to add something? Or everything is said on that?
Почти все сказано, но я
Almost everything is said, but I would like to focus more. Venture invests and buy, first of all, the reliability of growth. In this respect, very important for us is we just don't need an idea. We need the company to be capable of stable, sustainable growth. And if they don't prove it operationally or the knowledge as to how to scale the product or create value for customers, we just don't invest in it.
Okay, I think what we learned today is that AI is not killing venture. It changes. We are growing up. And I think it's not killing venture investors. It's more an assistant. And as we learned today, venture is very much about relationship making. And it's about decision making and speed of taking decisions. I think that's it. Thank you very much. Thank you, my guests.